Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, January 7th. Markets took it on the chin yet again, and we are seeing some nice little weakness and, of course, some great volatility. So we want to see if the markets are ready for a bounce today or the next couple of days, or do we have some further move to run to the downside. So I want to take a look at some of the key indicators, and I want to show you, first I just want to show you in general as a whole. Copper used to be a really big global indicator as far as how the markets are doing, and how, as we all know, that copper is an industrial metal. So everything really isn't copper, and if Chinese are buying a lot of copper and everyone else is as well, that's a good sign that we have some global growth. As you can see, copper is been down since early June, and if you look back even further, it's been down for the last year and a half. And making still new lows. So that's not a good sign as far as an indicator of the global economy. There's a lot of things that are going on. Obviously, we also had some soft economic data the last few days that also put a little damper on the U.S. as far as our growth's concerned. Also, we can't deny it, oil. Now, crude oil is a big factor here. There are tons of jobs being lost every week that a rig is being closed, and if you look at the closings of rigs, they're easy 50 to 60 and sometimes 90 people working on one rig. So that's not a good sign, although we do see there are lots of stimulus that goes on when we have gasoline that's under $2. But if you really look at it, it's going to hurt a lot of jobs, and a lot of people are going to get hurt by these rig closings. So that's not going to be a good sign. And also, a lot of these economies, these oil-rich nations that need oil to keep their economies going, are really going to have a tough time. So, you know, crude oil at $45, anything below that, there's going to be a lot of problems, and you'll see that kind of start trickling into the economy as well. Don't forget, a lot of these stocks, there's a lot of oil services, oil rigs, oil drillers, producers that are all in the S&P 500. That's also going to take effect and hurt the S&P 500 if this continues. So we just want to keep an eye on crude and see what that happens. Now, do we have crude in a foresight of possibly bottoming? Who knows? I mean, we looked at crude being 75. That area was blown through. Then we looked at crude being 50 to 52. That literally just was sliced right in half. The next area really is $48, and we're there now. And this $48 is going to really need to hold here. If crude does not hold at 48, you'll get a quick rush to 42, and then you're in the 30s, and that's going to be really, I think that's going to be problematic for the markets as well. So we really want to pay attention to what crude oil is doing now. Nobody can call a bottom here in crude, nor do you want to. You want to literally wait for a base. I am looking patiently at crude oil and see if this thing could base for a couple days and give us a good entry, at least in the short term, for a dead cat bounce. Remember, mind you, if you are playing it, I would not be playing this to the short side. Although this is heavily shorted, at one point you're going to get a very big and violent snapback rally, and it's going to take out a lot of shorts. So just be very, very careful when it comes to that. All right, so let's go back to the markets here. Next is the bullish percent, SPX, and I always like to show you this when we get our crosses. We did get a little cross here, and then we came right back up, and then we got a cross to the downside as well. So watch this. This is on a sell signal. This is the bullish percent point and figure. Very, very reliable, okay? So this right now is on a sell signal. Can you get a bounce for a day or two? Of course. But just the overall picture, more for the swing traders that watch the video. Watch this here. We are on a sell signal, okay? Now let's take a look at the McClellan Oscillator. McClellan Oscillator has a lot of room to run to the downside before it gets oversold. So what are we doing here? We're looking for a washout. We're looking for something that the markets are tired, and we have a capitulatory sell-off. This has not happened yet, okay? Now we're down 5 days, I believe, but 5 days of orderly selling, so we have no fear yet. So this, I think, we can move down a little bit more before we get some sort of a decent bounce. Okay, I'm not talking about a bounce for the day. I'm talking about more of a bounce play that'll last 5, 6, 7 days. Okay, But right now, as you can see, we're still not really near the washout area where I'd like to see and start nibbling to the long side. Here is the advanced decline with volume. As you can see, last time we were at the washout, I think I called this on another video. Watch out for a possible bounce, and sure enough, we did get that for 8 trading days. So we'll still need a little further push to the downside, okay? All right, and we have the stocks above the 50-day moving average in the S&P. As you can see, we are not at washout levels yet as well. And this I showed you in October, so we need to get back down to these areas, okay? Same thing with the NASDAQ above the 50-day moving average. Same thing here. We're not even close to that yet. So look for, I'm going to be watching this closely as the days progress, and we'll see what happens in the coming days. Now, I do expect the markets to be at least get some sort of a correction this year. I mean, obviously, we were all expecting it last year. Never happened. But as the markets continue to grind higher, there's got to be some sort of a correction. I'm not talking about a 5% correction here. I'm looking at more of a 10 at the bare minimum to a 20% correction. And that 20, corrections can be actually turning into bear markets as well. So we're, I think, year 7 in this bull market that we've had since 2009, I think, 8. To me, I think it's a little tired, and I think it's ready for a rest. Here's the VIX, and as you can see, we are now still inside that Bollinger Band. We want that VIX to continue to spike up, so I think it's got plenty of room to run to the upside, meaning that there's more selling pressure in equities. Remember, guys, not talking about just for today, all right? I would suspect a bounce down 4 days, look for a bounce for a day or two, and then I think resume the selling. I think the selling will continue. Okay, and let's take a look at some of these indicators. Some of the indexes. Now, a lot of them have met our targets so far. We said the 200 if it broke to 50. We're almost there now. I do suspect a little bit more selling coming in to hit that 200 in the spiders. Here's the transports. Actually, that was that low that we were looking for, met our low. Okay, so we're there now. Now is the critical juncture where we're going to need to bounce. Because if not, and we take this local low out, then I think we're going to hit that 200 for the next target. Qs are, as you can see, hit our target already. Now this is going to have to hold. This is the gap fill here from way back in November. If it does not hold, then look for further downside. And that next target is going to be the 200. And as you can see here, we have a thin zone on these volume profiles. If this starts to break, there's really nothing going to hold this back to the 200. Okay? So let's keep that in mind. And I'd write these levels down as well. Same thing here. 172. The 200 would be in the Dow Jones here. We're almost there now. And we do have a little bit of support here coming in. So the 200 really is going to be the play key if we break this 172 area. Okay, and last is the IWMs, and again we're at the 200, and we're at this cluster that we've had this sideways consolidation on this channel for a couple of months now, and we're hitting this now. So just watch these levels, guys. Write them down, put alerts on it, and we'll see what happens. Now, looking for a bounce. I think a bounce should be in order for the next couple of days, and then we really need to determine if this market is going to get sold off again or not, right? And if it does, then once we get confirmation or for the analysis work, then we can say safely that we can start selling rallies, okay? Until then, you're in day trade mode. Take the trend for the day, follow it, and look for pullbacks if you're long, or look to sell rallies into resistance if you're looking to get short. Have a great day, and we'll speak to you tomorrow. Take care, everybody.